Hey guys, good morning again. Thanks to everybody who helped me with this silly thing earlier. I need to do another sound test here before we get this going, but I think that we've got it. Tell me if you can hear the theme music. You should be able to hear that. Awesome. It was a BeLive problem. So for all of you that said, turn it off and turn it back on. Remember the one I laughed at? The one I scoffed at? Whatever. Turn it off and back on. You're crazy. That can't be the answer. There's no way that's the answer. That was the answer. All right. Let's get my agenda up. Got some great headlines. Okay. This is for tomorrow. Here we go. Live from my mom's half finished basement. It's Money in the Morning. Hey kids, I'm Joe Saul-Sehy, Average Joe Money on Twitter. And on today's podcast, two headlines ripped from the financial news. Headline number one says, Bitcoin falls early this week as a new hack is discovered. What does that mean for you and your cryptocurrency dreams? We'll have that on today's show. And also advisors teaching you how to make sure that they're trustworthy. That and a big idea all on today's Money in the Morning. Money in the Morning is happy to be brought to you by M1 Finance. You know, when you're tired of that robo-advisor and you want to press the easy button, guess what? You can't do it without leaving the robo-advisor unless you've M1 Finance. Because M1 Finance is free, flexible. Keep the training wheels on with the robo. Do it yourself, whatever you want. Maybe half and half, 2/3, 1/3. I don't know. Get crazy. StackingBenjamins.com/M, the number one finance. M1 Finance. Be invested. All right, guys. Let's get this party started.
Hello, darlings. And now it's time for your favorite part of the show, our Stacking Benjamins headlines.
Feels great to be rolling because all of those of you listening, we do this live in front of a Facebook audience. And we had an extended sound check today because Mom did some dusting here in the basement. Whenever she does that, she touches the controls. And I had said the problem couldn't be as simple as just shut everything down and start it back up again. And everyone in Facebook said, no, shut it down and start it back up again. I scoffed, and guess who was right? As usual, the stackers were right. And I was wrong. We turned it off. We turned it back on again, and bam, we're here. But it feels good to be here. So anyway, happy day. First headline comes to us from CNBC. This is written by Evelyn Chang. Bitcoin swoons 10% Monday after news of South Korea crypto exchange hack leading to a broad cryptocurrency sell-off. Bitcoin tumbled more than 10% over the weekend to its lowest in 2 months after a relatively small South Korean exchange said it was hacked. Over the weekend, crypto exchange Conrail tweeted that it was hacked and noted that lesser known cryptocurrencies such as Pundi X were among those affected, according to Google Translate. The Pundi X Bitcoin pair is the most traded on Conrail, coin market cap data showed. However, CoinRail's public statements didn't mention Bitcoin, according to Google Translate. Nevertheless, Bitcoin hit a low of $6,647.33 on Sunday, its lowest since April 9th, according to CoinDesk's Bitcoin Price Index, and coincided with a broader crypto sell-off. The digital currency traded off those lows Monday morning near 67.74. Other major cryptocurrencies also fell. Ethereum dropped more than 11% to near $533, according to CoinDesk. The declines followed a report on Friday from the Wall Street Journal citing sources that U.S. regulators are investigating potential price manipulation at 4 major cryptocurrency exchanges: Bitstamp, Coinbase, Itbit, and Kraken. The companies did immediately respond to CNBC's request for comment on Sunday evening. So we got the feds coming. Number one. Number two, we've got people being ripped off on cryptocurrency. Lots and lots of big cryptocurrency news this weekend and on Monday. And so what does that mean? Does that mean that your cryptocurrency dreams are dead? Nope, not at all. Cryptocurrency still the wave of the future. But if you haven't heard it loud and clear here and many, many other places that talk about finance, cryptocurrency is the wild, wild west. And what you have to realize is that there's going to be a ton of bumps in the roads like this. It's just like buying a tiny company. When your company is tiny, you know, we've got, as an example, we've got at Stacking Benjamins, 4 people plus Cade and the intern. That's it. So anytime there's any bump in the road, we had a bump in the road last August when a firm that reports our stats for us, they tell us how many people are watching. It turned out that we didn't have as many people watching as we thought we did. That's great. Not as many listeners as we thought we did. That stumble, when you're shorthanded, creates big, big waves. And it's the same when you've got a small thing like cryptocurrency. People go, oh, wait a minute, Joe, there's billions of dollars in cryptocurrency. Yes, there is. But when you look at the size of the cryptocurrency market versus the size of the stock market, much, much, much smaller. And because it's the new thing, you've got lots and lots and lots of bumps. So this, just another bump in the road. And if you think it's the last one, what's that mom says? We got a bridge to sell you, right? 2 things. Regulation is coming. There's no way regulation's not coming. Like if you're thinking about the next thing happening, maybe it's not the next thing, but down the road, you're going to have regulators coming. And with news out of Coinbase now purchasing some other exchanges, brokerages, right? The SEC kind of comes with these brokerages. So you're going to have regulator hands coming into cryptocurrency. That's going to make things shake. And then second, this isn't the last hack. There's going to be more hacking happening in this world. So I think that our takeaway here is buyer beware. And not just with this, right? If you buy a stock that isn't listed on a big exchange, so little tiny stocks called penny stocks. People talk all the time about, buy penny stocks. Here's the problem with penny stocks. Market manipulation happens all over penny stocks. And it's because of the fact that there's no regulator at the exchange. No, we're not even talking about the federal government here. We're talking about the exchange trying to keep their nose clean. If a stock is traded on what's called the pink sheets, now we're getting into some jargon, aren't we? Pink sheets mean you've got these sheets where a broker, let's say it's me. Let's say I work with a little company here in Texarkana that wants to go public. I got a bunch of shares on my desk. I'm their broker, right? So I'm going to be dealing with people in and out that want to buy shares of this company. If they're not on an exchange, you're buying it directly through me. And what you'll find is that price manipulation, when you don't have anybody watching from a major exchange, gets much, much, much easier. So penny stocks, cryptocurrency, lots and lots of bumps in the road. Let's say hello to all of our friends saying, I told you so on Facebook today. And Ben said he finally learned something from the show. Don't clean. Yes. We, mom dusted here and got our audio all mixed up. And we ended up having a long session trying to get this microphone working. Finally happened, but just by turn off and turn it on. Susan says the IT crowd. Lori's here, says finally oiled machine that is money in the morning. Yes, duct tape, tons and tons of duct tape, Lori. Ryan says, cough, told you so. Cough. Roger, the retirement answer man's here with us. Hey, Roger. John's here. Ryan's here. Man, we've got a nice group. Aja's here. The star of our show on Stacking Benjamins last week. Isn't her story great? I absolutely love Aja's story. And if you go listen to last Wednesday's show, you'll hear it on Stacking Benjamins. All right, guys, let's move to our second headline. And by the way, while we're doing that, Facebook crowd, tell me your take on cryptocurrency. Are you in cryptocurrency? You buy some? Did you buy it early? You start buying it lately? Did you buy it in January? I don't know if anybody's going to admit to buying it January when there was the big YOLO thing going on, right? YOLO, you only live once. How about the FOMO? Let's see, I'm getting my acronyms mixed up. The fear of missing out, right? In January, it felt like everybody was afraid of missing out. Everybody gets in, and then it goes to the floor. Second headline comes to us from Investment News. I found this really interesting. This written by Mark Schaff. Advisors encourage investors to take fiduciary into their own hands. So some of you may not know what fiduciary means. That means that your advisor, if they're a fiduciary, they are required to act in your best interest. So no matter what their personal interest is, they have to be able to prove that they acted in your best interest. So fiduciary standard is something that you're looking for from your advisors if possible. All right. As regulators struggle to reform investment advice rules, a group of advisors and investor advocates is encouraging clients to seek a higher standard on their own. With the Labor Department's fiduciary rule teetering on the brink of death and the Securities and Exchange Commission setting off on a potentially long rulemaking process, the Committee for the Fiduciary, let's start that again. The Committee for the Fiduciary Standard is renewing a push for its fiduciary oath. The one-page document outlines 5 fiduciary principles a financial advisor must follow to put the client's interest ahead of their own. They include acting with prudence, not misleading the client, avoiding conflicts of interest, and disclosing and managing unavoidable conflicts. The oath, meant to be printed out and signed by advisors, has been around for several years, but recent events, such as the Fifth Circuit Court of Appeals striking down the Department of Labor rule, have increased the urgency to get into circulation, according to Patty Houlihan, chairwoman of the committee. This is an interesting piece, and I'll have this on my Twitter feed at Average Joe Money, because this idea of a fiduciary standard, we all want our advisors to act in our best interest, and yet we hear people get in trouble all the time because their advisor took advantage of them, because their advisor acted in their best interest instead of the client's best interest. I hate it when I hear those stories, which is why people want the fiduciary. So because of that, I love this idea of a one-page document that the advisor has to sign, taking this oath. Now, does it have any legal teeth? I don't know. But there's a big part of me that doesn't care. I remember having a couple clients that were just very difficult meetings. A couple, by the way, of my favorite clients when I was an advisor. They would come into meetings and they would spot check. And when they spot checked everything, they sometimes find stuff that I had done that wasn't non-fiduciary. It was just stuff that they had big questions with. And we ended up having this great conversation about how their money was being managed. And you know what? That made me a better advisor. Somebody spot checking, somebody acting like they cared, somebody pushing my game made it so I served them better. And they were advisors for a big part of my career when I was a financial advisor. 16 years I did that. And I think that these two people were clients, one for 13 maybe, and one for probably 15 of the 16. But they would constantly, and you know what? I went to meetings with them with other advisors and they did the same thing. They weren't difficult to work with. They were people that expected me to be on my best behavior. And I think if you put a one-page oath in front of your advisor and said, I need you to sign this. And it's not that I'm second guessing you. It's that I'm having my advisor sign this, that you're taking an oath, that you're going to do these things. And by the way, there's a piece of this that I also want to comment on, which is this idea of unavoidable conflicts of interest. Sometimes there are unavoidable conflicts of interest. Maybe there's a deal that you heard of as an advisor that involves a friend. You heard about it from a friend and Good for you if the client does the thing with your friend. But because the person's your friend, that's why you know that it's the best thing for them, because you are expected to bring people with integrity to the table, and your friend has integrity, but they're still your friend. It's a conflict of interest right there. You've got two different interests going on. Doing the right thing, forcing your advisor to do the right thing, to tell them when there's an unavoidable conflict of interest. I love that. That is fantastic. I'm working with a professional right now who had that happen. And it was absolutely fantastic when she had to reveal that to me and said, hey, but this is why I'm recommending this person, specifically because of this conflict of interest. So good stuff there. I think our takeaway from number 2 is don't wait for a rule. Own it. Own the fiduciary standard, kids. If you're stacking Benjamins, you want to make sure that you're pushing your advisor's buttons. Push them. Oversee them as if they work for you, because they do work for you, right? Don't expect them to always be on their game. Push them to be on their game. And I think that they will. All right, let's say hi again to our friends on Facebook. As I mentioned earlier, we do this in front of a Facebook Live audience. And I asked the question about having money in cryptocurrency. Jamie has $25 in Litecoin. That's a big, scary investment, Jamie. Lance from the Money Manifesto is here with us. It says no crypto for him. No crypto for me either, Lance. And then what else we got here? Susan has no crypto. Ben has no crypto. And looks like a lot of people, no crypto in our audience. I don't know if is that a good thing or a bad thing? I mean, I like the idea of getting in early. So I kind of like the $25 investment, Jamie. So when Jamie says last time that they checked, it was $31. So I like this idea of a small investment, right? I mean, if you like crypto and you think it is a wave of the future, I've been thinking a lot about putting just a little bit of money. $25, $50, nothing. Aja got $11 of Ether, and now it's worth $6. So good stuff there. Let's talk about fiduciary here. Our second headline, Ryan says, the question is, what kind of oversight is there? What can you do if you don't think somebody's acting in your interest? Anyone can sign a sheet with no intent to follow through. I agree. So when it comes to advisors, you've got two different recourses, Ryan. Number one is if they're a member of FINRA, you can report them to FINRA. And there's this cool place called Broker Check. We actually have an advisor coming on the show on Wednesday who's going to talk a little bit about Broker Check and about checking with your advisor. The second is if they're a certified financial planner, you can go to the CFP board. So you've got a couple different avenues to report people that aren't doing it without just going to court, right? I mean, you can always go to court. So you do have some things that you can do if you think your advisor wasn't acting in your best interest. All right, let's one more time talk about M1 Finance, because M1 Finance sponsors the show. And the way they do it, by the way, if you use our link, stackingbenjamins.com/M1 Finance, they will then send us a thank you for introducing you to them. And you want to go to M1 Finance because of the fact, not because they're affiliated with us, but because of the fact that M1 Finance has all the easy buttons that a robo-advisor has. In fact, all of the same services a robo-advisor has. And also, you can do it yourself if you want to with a portion of your portfolio. They organize portfolios in what are called pies. So I might have a pie that's 75% of my portfolio that's organized like a robo-advisor. And then I've got the other 25% that I'm doing myself. Maybe I've got my sandbox, we call it, where I'm managing my money by myself. You can do both of those things together. You can switch back and forth, whatever you want to do. Far more flexible than a robo. M1 Finance, stackingbenjamins.com/M, the number one finance. Be invested. All right. At the end of each show, and today's no exception, we talk about one big idea. And what's the big idea from our headlines today? The first one is about cryptocurrency and about a lot of people losing money in cryptocurrency and about bumps in the road. And then the second takeaway, the second was from our piece about advisors saying, hey, have people sign an oath. Don't wait for these fiduciary rules that are hung up and might be dead, maybe not. Don't wait for the government. Make sure your advisor's acting in your best interest. Here's another way to get that done with this one-page oath that this group of advisors are talking about. I think that means our big idea tying these two stories together is this. You're always going to do better. You're always going to do a better job when you own your success. If you own your success, you're going to realize that it wasn't a happy accident. And if it was a happy accident, you're going to find a way to replicate it, right? Sometimes you will stumble on things, but that's not really success. That's a, hey, high five, look what I found. We don't want to stop there. If something went well for us, then I want to automate that success so I can do it again and again. But equally as important, maybe more important, is to own your failure. And failure is not something you don't want to have happen. You want to fail, right? Thomas Edison with the light bulb very famously said that when he had his 100 different variations, it didn't work. Those were 100 things he didn't have to try anymore. 100 different ways that he knew light bulbs wouldn't operate, right? Own your failure. Owning your failure and realizing that you fail means that you're going fast. And failure is just another life lesson on the road to success. I get really frustrated when people around me don't own their failure. And not because it hurts me, but because of the fact that I think you miss out a lot on life if you don't say, you know what, I messed that up. And by the way, I'm one of those people. I like you more if you told me that you messed it up and you come clean with me and tell me how you're going to do it right the next time. Right now, if you keep messing up the same thing over and over and over and you work with me, I'm probably not going to be happy. But if you mess up, you learn from it, then I know that you're going fast. And by the way, in business, no matter whether you work for somebody else or work for yourself, going fast, being 95% right, way better than being 100% right and being slow. 95% right and fast is going to win the business over and over and over, going to get the job done. Whether it's impressing your boss or working with yourself, it's going to be a better way to go. Own success, own failure. I think that's our big takeaway today. All right, guys. Thanks, everybody on Facebook. Thanks to everybody listening. We'll see you again here tomorrow. Go stack some Benjamins. Bye-bye.
Money in the Morning is created by Joe Saul-Sehy and is brought to our channels by our producer and engineer, Richie Rutter-Reese. Stacking Benjamins and Money in the Morning are for entertainment purposes. Before making moves, consult with your financial advisor. Looking for training sessions? Kathleen Sellemans has a great suite of Stacking Benjamins tools, so head on over to learn.stackingbenjamins.com. Hoping to chat with us on the web? Say hello to Shannon Cowan, our social media guru and community manager in our Facebook group. She can be found at stackingbenjamins.com/basement. From the basement, I'm Joe's mom's neighbor, Doug. See you tomorrow.
All right. Hey, Jamie, you were asking if I was being facetious. If I, about maybe, I'm assuming looking back that you're talking about buying Bitcoin or buying a cryptocurrency. Absolutely not. No, I think I'm going to buy a little. I think I'm going to buy a little just as an experiment, because I think that when me right now, I don't own any. So not having any skin in that market makes it a little more difficult for me to talk about it. Not incredibly difficult, because I think I get the game. But I find when I have a little bit of money in it, some of the minutia, some of the granularity. It's almost like when you own a rental house, right? Learn how to fix the toilet first yourself. And then if you've fixed a couple toilets, you don't get to fix all the toilets. If you own 10 rental houses, fix a couple, understand what's going on, hire somebody then to do the rest. So I don't have interest in having a big piece of cryptocurrency, partly because of that regulatory stuff that we talked about, but also partly because of the fact that just the amount of data about where that's going. I prefer much more of a value investor that way, or growth at a reasonable price probably would be the terminology you'd use for a guy like me. But so not knowing what that price is really bothers me, but I want to own just a little bit of that. Listen to podcasters and those have shows. You have to mess around with your equipment. That's funny, Paul. John, thanks, man. All right, guys, we're going to set up the next one. We're going to do one more here in about 15 minutes. All right. See you in a minute.